Movie camera, opening scene, futuristic skyline with glowing data streams. Light bulb, did you know that global banks are projected to save over $400 billion by 2030 using AI-driven strategies? And a large chunk of that comes from generative AI. But what exactly is generative AI doing in finance? And can it really forecast markets or even design entire investment strategies? Stick around, because in this video we'll explore how generative AI is transforming forecasting, risk management, and high-level strategy in the financial world, and what that means for your investments and career. Welcome back to the channel where we decode the future of money and technology. Today's topic, generative AI for finance, isn't just another buzzword. It's reshaping how financial institutions plan, predict, and profit. Imagine a world where AI doesn't just crunch numbers, but actually writes its own financial models, generates risk scenarios, and even drafts investment strategies, all in real time. Sounds futuristic? It's already happening. By the end of this video, you'll have a clear understanding of how generative AI works in finance, the opportunities it's unlocking, and the risks we need to watch out for. Let's rewind a bit. Financial forecasting has always relied on models, econometric equations, human analysts, and historical data. But with the explosion of big data and machine learning in the last decade, we've moved from predictive analytics to generative intelligence. Generative AI, think GPT-style large language models and generative adversarial networks, doesn't just analyze patterns. It creates new financial scenarios, synthetic market data, risk simulations, even automated research reports. Bar chart stat. McKinsey reports that the financial services industry could unlock $200 to $340 billion annually through generative AI adoption. From Wall Street banks to Fintech startups, everyone is racing to deploy these tools. And the pace of adoption in 2024 and 2025 is nothing short of revolutionary. Forecasting with generative AI. First, forecasting. Traditional models rely heavily on past data. But markets are volatile. Yesterday's trends don't always predict tomorrow. Generative AI can simulate thousands of market scenarios, creating synthetic data to stress test portfolios. Example, JP Morgan's AI division uses generative models to simulate rare market events, like 2008-style crashes or sudden interest rate spikes, helping risk managers prepare for the unexpected. Think of it like a weather forecast, but for finance. Instead of predicting just tomorrow's temperature, the AI creates thousands of possible weather patterns, allowing investors to plan for any storm. From prediction to strategy, AAP SOC Rahi Hong. Forecasting Feek High. Lekin Strategy Kais Benegi. Here's where it gets exciting. Generative AI isn't just predicting outcomes. It's designing investment strategies. It drafts algorithmic trading rules, suggests portfolio rebalancing in real time, generates customized financial advice based on client behavior. Case in point, BlackRock's Aladdin platform already integrates AI to recommend portfolio adjustments. Imagine coupling that with generative models that can write entirely new trading algorithms on the fly. Billionaires like Ray Dalio have spoken about the edge that algorithmic strategy gives to hedge funds. Generative AI takes this to a whole new level, writing strategies faster than any human quant team. Beyond markets, risk and compliance, let's not forget the regulatory side. Generative AI can generate synthetic risk reports, simulate fraud patterns, and even draft compliance documents, tasks that typically consume thousands of human work hours. But here's the flip side. AI models can hallucinate inaccurate data. Over-reliance could create systemic risks. A famous analogy, think of it like autopilot in an airplane. It can fly the plane in clear skies, but if a sudden storm hits, a skilled pilot is still essential. Banks are investing heavily in human AI collaboration to ensure that generative AI's output is always cross-checked and compliant. What will 2025 or even 2030 look like? Analysts predict Over 70% of financial institutions will integrate generative AI into strategic planning. AI-driven trading strategies could handle over 50% of global equity trades. But the risks are real: data privacy breaches, algorithmic biases leading to unfair lending or investment decisions, potential AI arms race among hedge funds creating extreme market volatility. What if a generative AI model, trained on biased or manipulated data, begins recommending high-risk strategies across global banks simultaneously? The ripple effects could be massive. Host, smiling. To wrap it up, generative AI is not just another financial tool. It's becoming the strategic brain behind forecasting and investment strategy. It promises speed, creativity, and predictive power, but demands careful oversight. Here's the takeaway. The future of finance belongs to those who can combine human intuition with AI-generated insights. Whether you're an investor, a financial analyst, or a student, understanding this shift is your biggest edge. If you found this breakdown valuable, like, subscribe, and comment below with your thoughts. Will AI outperform human strategists in the next decade? I'd love to hear your perspective.